Hello and welcome to the Gold Newsletter. My name is Kai Hoffmann. I'm the JR Mining guy over on X, and together with our good friend Brien Lundin, I'm your host of the Gold Newsletter YouTube channel, and I'm looking forward to welcoming Ross Beaty. He's the chairman of Equinox Gold, and if you don't live under a rock, you might have heard that the company announced a merger yesterday. They're merging with Calibre Mining, a really interesting transaction, and we're going to quiz Ross a little bit about the deal. What has some of the feedback been? Like, he's currently at the BMO conference down in Miami or Hollywood, Florida, and I'm really curious, like, what's something he's picked up from the audience, the attendees here at the conference. What's some of the feedback he's been hearing about the deal, and of course, what's the rationale behind it? Like, what's the end goal? What's the business plan? Are they gunning for Agnico Eagle? Are they trying to achieve 3.5 million ounces of production at some point in time? We'll find out. We'll quiz Ross about that. Before I switch over to my guest, hit that like and subscribe button. It helps us out tremendously and reaches a wider investor audience. So thank you so much for that. Now, Ross, it's great to have you on the program. Good morning, and thanks for being available.
My pleasure, Kai.
Yeah, congratulations. I think if you do a billion-dollar deal or transaction, you have to congratulate someone for it, and nicely done. Congratulations.
Well, it's not done. It's only announced, and it's going to take 2 or 3 months to get complete. We need shareholder votes from both companies, and of course, we have to assume there's not going to be any interloper. So it's not done till it's done, but it's certainly a great start, and it's the beginning, of the end, in the sense that we've spent about 7 months looking at assets, talking about this deal, and finally we made the announcement a couple of days ago, and we're out in the public now. And now we actually have to go to the shareholders.
Well, convincing the board is a difficult process to begin with. I'm on the board of two companies, and trying to get consensus on the board on anything is
Yeah.
always a hassle, right?
Yeah.
Maybe we'll start there, or maybe give us the cliff notes of the deal. We'll do that first for people that haven't seen the details or so. Run us a bit through the cliff notes and maybe a bit of the rationale for the transaction there, Ross.
Sure. Well, let's see. Where do I start? Uh, as some of your listeners know, we've been building Equinox Gold for the last, I guess, 8 years now, uh, really to create a very large, new, very strong gold company through M&A. And my goal has always been to get to scale, get big, because sort of size matters these days in the gold business, in the equity business particularly. And so we started out in 2018, just with really almost, well, no producing assets. And today, I think last year we produced 600 and some thousand ounces. And the culmination of the company so far has been the construction of the Greenstone mine in Ontario, which will be kind of nameplate around 400,000 ounces a year. And this year we expect somewhere between 300 and 350,000 ounces. We're just scaling it up from completion of the construction and commercial production last fall. So we have this huge deposit in Ontario. We have another mine operating in California, another one in Mexico, and 4 in Brazil. 2 of those 4 were actually consolidating. So we have a pretty good profile. We've done well. We've got about a $3.5 billion market value, and we are now just really at the cusp of a really radical change in our balance sheet or income statement, with a tremendous amount of cash coming in over the next couple of years, in order to get rid of all the debt on our balance sheet, really de-lever as quickly as we can. And that's in front of us. Well, along came Calibre. I've known Blaine Johnson and Doug Forster for many, many years, literally many decades. They're great guys. They're incredibly good at making shareholders wealthy. And we had a little conversation, and we thought, wouldn't it be great to combine these two companies? They have just been working on a very large Canadian gold deposit as well, called Valentine. They have current production of about 250,000 ounces, coming mostly from Nicaragua, and it's profitable. And when we looked at them and they looked at us, we just thought this was a really good combination, a really good merger, where we could combine these 2 big Canadian assets, huge mines at the start of their productive life, to build a real Canadian mining powerhouse. We'll be the second largest Canadian gold producer, with operations in Canada. We'll be producing well over 1 million ounces of gold. We are guiding to like 950,000 ounces without Valentine this year, and without our Mexican mine, Los Filos. So we should be comfortably over 1 million ounces. And then, of course, well over that when you look at all the other growth in the combined company. And the other thing that fit really well was our management teams. So we bring very strong financial strength, administrative strength, kind of deal-making strength, and they have a very strong operating team, which will really enhance some of our assets. So it's really a combination that creates value. 4 of their board members will be on the combined board. We'll have 6, and it's not an acquisition as you might think. It's a really great combination that should create value for shareholders of both company, and I mean a lot of value. We'll, if you look at our cash flow coming out 2025, 2026, analyst consensus has us, around 1.8 billion dollars of EBITDA this year, about 2 something billion next year. I mean, it's really going to be a financial powerhouse, a very large gold producer. We'll move from the mid-tier space into the senior space. There's only about there's maybe 20 or 30 or maybe even more companies in that mid-tier space globally for equity investors, but there's only about 8 now who produce over like 1 million, 1.5 million ounces a year in the world, and accessible to equity investors, and we'll be one of those. So I think it's going to be a great deal for shareholders when it concludes.
Yeah, it's like based on the market reaction. Like you were flat yesterday, Equinox. That's a win in my books in this market.
Yeah.
So the market seems to appreciate it. Calibre was down a little bit. Like valuation seems to be a bit of a discussion point up in going through the internet and like looking on X for some commentary. And it seems like consensus is like you guys, and meaning Equinox, got a good deal here, while Calibre Mining shareholders might is like. Not a bad deal, but since it was a no premium deal, it was like, we're only like a 35% partner in the new venture. Like, what is some of the feedback you're getting in that regard? Like,
Well, I think a lot of that, some of that noise is out there on day one. I think that's going to disappear as the week goes on and as next week comes and so on. Once people really understand what we're doing here and look at the relative valuations of both companies, I would say it's always kind of the case when the one entity always feels it hasn't had as much recognition for its assets, and the other team feels exactly the same. And when that happens, you sort of say, when you really know the assets, when you've looked at the assets and you've done all the due diligence, going to the mines, looking at the balance sheet, when you combine these type of things, it's almost like the best kind of deals are where both sides feel a little bit undervalued, if you know what I mean. And I think that could be the case here, but I would say there's just as many on the Equinox side as on the Calibre side. And at the end of the day, it's just noise. I mean, whether it's a percent or two this way or that way, it makes no difference. In the big picture, if you look at the valuation bump that we should be getting because we're much bigger, if you look at the bigger financial strength, the better ability to delever both of our balance sheets, the strength in growth in both companies that will take us even to higher levels of gold production, better profitability, more rapid ability to pay dividends, share buybacks, allocate capital. It's a very compelling transaction with 2 companies that are very alike, and they're not only alike in assets, they're alike in management and in boards. I mean, I think very much like Blaine and Doug think, and I think I think we're going to have a great run here, and at a much higher valuation. Typically, as you get bigger, you will have a higher multiple, and we expect that will happen. That'll benefit both sets of shareholders.
No, absolutely. And I need to follow up with something you've said in various interviews. And probably one of the first things you said on the webcast yesterday, Ross, is ETF relevancy and institutional investor money relevancy. Like
Yeah, sure.
you said on Kitco, and I'm quoting here, is like whole new pile of money will be coming in. How relevant is that? And maybe maybe a personal anecdote. I spoke to Blaine Johnson at the BMO conference in 2019 by the pool, and he told me, Kai, whatever I do next, it's got to be immediately index relevant. And I can't shake that feeling that the number one reason for that transaction was really size, meaning relevancy. Is that the case?
Well, it's definitely size and relevancy for sure. But it's a sad reality of today's market, and it's a very significant reality, though, that a tremendous amount of capital that comes in and out of the public markets every day comes from passive investors. These are ETFs, of course, which are bigger and stronger than ever today. It's algorithmic traders who will trade on momentum, on liquidity, and not at all relevant to fundamental value. So this is the world we live in. This is one of the reasons the junior sector has been so starved of capital. And it's another reason why you get these quite significant swings in some equity prices when, for example, companies put out, earnings that might be a tiny, tiny miss, and the stocks just get crushed because you have these algorithms that look through news releases and look for words, and it's a strange world we live in, but it is the world we have, and we have to deal with it. So one of the ways to deal with it is to simply get bigger, because as you get bigger, you go higher in the rankings of the ETFs, for example, and that by itself brings in a tremendous amount of capital into the public equity markets. So, for example, we expect just on that one subject, and by the way, Kai, it was the least of the reasons that we did this deal, the least of the reasons. It was a reason, but it was a tiny one. And there's many, many other reasons that are much, much more significant. But this we expect on conclusion of this deal that the new Equinox will move up, many rankings in the scale within the GDX and the GDXJ and a bunch of other ETFs we're on. I don't know how many ETFs we're on, but there's a whole pile. And that alone will bring in about $350 million of new buying into the combined company's value, which is a hell of a lot because it's fundamental buying. It comes in and it doesn't go up once those ETFs hold their positions, provided that we maintain that scale. This is about a $7 billion, $7.5 billion company when we complete this, and that's going to bring in new buying. So one of the results of that is not only is the new buying boosting the share price, but it's also increasing our multiple, our price to net asset value multiple. We're at maybe 0.7 or 0.75 right now. And by the way, both companies were trading at kind of the same multiple for the last year. It's been remarkable how close we've been trading together as we both build these big new Canadian assets. So we expect a higher multiple, and that'll just simply with scale, and that'll bring a higher share price. And when you look at where investors want companies to be mining these days, there's been a lot of blowups in places like Mali and other places in the world, Panama, and investors in recent years have really piled into companies that are based in Canada, trading in these great jurisdictions like Ontario, Newfoundland, and this will be now the second largest Canadian source gold producer. So we really expect that will bring another set of investors into the company, and all of this will be quite therapeutic to the share price. So that's kind of why scale matters. ETFs, it's a reason, but by no means the only, and actually not the main reason at all.
Yeah. No, I'll ask you in a second, like what kind of doors that additional liquidity opens for you, Ross. But one more question that popped up on the webcast yesterday on the conference call, and I think two people asked about it, two analysts, I forgot who it was, is really they stumbled over the $75 million financing that Calibre is doing right now, and gave them a bit of pause. And I'm not 100% sure they were satisfied with the answer of financial flexibility. Because there should be enough in the balance sheet. Like, yes, the transaction is happening, but can you elaborate on that a little bit? Because what I heard was concern about Valentine.
Yeah, I mean, yeah, and I get that. Don't forget this was not the Equinox problem. This was a concern that the Calibre board had and management had, that when you do these deals, you get in a kind of a limbo period where you cannot do any new financings. You've got to just freeze for, could be 3, could be 4 months. We also have, some approvals we have to get in Mexico, for example. That takes quite a long time. And so during this freeze, what's Calibre doing? It's building this big mine in Newfoundland, and they're vowing that they are on time, on schedule. They're going to have first gold pour at the end of Q2 this year. But bumps happen, and this is a reality of the mining business that everybody has to consider. It's possible that there will be issues that come up, or for one reason or another, there will be delays and perhaps a little bit of an overrun. And they didn't want that to happen, especially during this period when they were kind of frozen out of being able to do anything, and we were not going to be able to help them. So just as a matter of prudence, just simple, prudent financial management, the Calibre team decided to bolt on this convertible debenture. Don't forget, it's a $75 million debenture, but Equinox has offered to pay 40, or will participate as to 40 million of that. And when the deal concludes, that will just evaporate. That will disappear as an obligation. So it's really $35 million to a couple of players, and it's really quite insignificant in the big picture, but it really adds to financial flexibility for Calibre. And it's prudent management. It's a smart thing to do. The last thing they wanted to do is to get into financial hot water right during the build, right at the last stage of building this big mine, and not be able to do anything about it. That's really the reason that they decided to do it, and we were happy to support them.
Perfect. Ross, I got two more questions for you. One is you mentioned Interloper earlier. I looked at the break fees, 85 and 145 million US respectively. Nothing to laugh at. Are you worried at all, or is that going to, like, just the break fee alone holding off a potential Interloper here?
I don't really know. Whenever you do these kind of deals, companies become, sort of get in play. For sure, Calibre could attract an interloper. We could attract an interloper, somebody who just says, we're deep value, which we are, and they'll come in with a higher price stock, and that's the end of the deal. That's the end of us. But I doubt that'll happen. If you look at the rationale for the deal, this is such, to me, a value accretive deal for both sets of shareholders. Combining these two big Canadian gold mines into one company, that alone should really be seen as a very positive move from the standpoint of share price appreciation for all the shareholders. If you look at the combination of management, the combination of boards, this new company is going to be a really great company. Um, there are some companies out there that might see it as deep value. I don't know. We can't look over our shoulder too much. And you do these break fees. If it were to happen, we'd either company would take the break fee and move on. There's other fish to fry, but it's very rare that there are assets that are so complementary as we have in our two companies, and management that's so complementary. So we have to just put our heads down and move on.
No, absolutely. Ross, very last question. I know you're tight for time here. But what's the business plan moving forward? I teased at it in my intro. Like, are you gunning for Agnico Eagle, 3.5 million ounces in total, 2.5 million out of Canada? Is that your goal? Artemis, New Gold, Alamos, should they, watch out now?
No, I don't think so. As you know, Kai, because I've been on your program a couple of times in the last, 7 or 8 years that we've been building this company. I've been really focused on scale. I've been focused on trying to build a big company that really delivers value, has financial strength, has diversification, and all those risk mitigation things in it. Strong management, great track record, and superior valuation. And we've done most of those, but we still don't have that superior valuation. But you get that when you get big. And I think this deal will get us into that very narrow and restricted ecosystem of big companies. We will be a go-to stock because we have these big Canadian assets. Over 50% of our net assets are going to be in Canada now. When we have incredible growth behind that, we have growth in California with the Castle Mountain deposit, which is in the middle of permitting, but it's a huge deposit, long life, low cost. We have growth in Mexico. We've got issues down there, but we feel we're going to resolve those really soon. That's an incredible ore body, and it has great growth potential behind it. We are going underground at one of our mines in Brazil. Again, long life, lower cost, and a really great deposit. That's the Aurizona mine. We have the Fazenda mine, which we're combining with our Santa Luz mine in this big greenstone belt in Brazil that we've just gone from a 3-year mine life. We've gone to more than a 10-year mine life, and it's wide open. So it's going to be another long life mine. That's in Brazil. We have now growth in Nicaragua. We have the Valentine deposit in Newfoundland that Calibre is bringing to us. It's a wonderful deposit geologically. I was struck with the long life potential of that mine. And then, of course, we have this giant new mine in Ontario, the Greenstone mine, which I think will be going for decades as a really cornerstone low-cost mine for this company. So I think we have enough internal growth that we don't need any more deals. Now, I will say we actually weren't looking for this deal. We weren't, pounding the pavement looking for opportunities. We have a lot of internal growth in Equinox. Calibre had a lot of internal growth itself. But as we started talking, and when we looked at what we're doing together, we thought, let's combine and try to build this powerhouse as a unified whole. So no, after this, we're going to focus on delevering starting to pay a dividend, starting to look at share buybacks, all that kind of stuff you can do when you have free cash flow surplus to your immediate needs. I doubt we'll be doing another equity issue for a very, very long time, if ever. And so it's really going to transform the company. But it's about the right size, I think. And I really look forward to having all this executed this year, and then internally growing from this point on.
Fantastic. Ross, no, thank you so much for your time. Great conversation. We'll have to sit down over bourbon and a cigar at one point, and you have to give me all the nitty gritty details of egos and all of that goes on in the boardroom after behind the scenes that nobody ever hears about. So I'm really curious about that. But in the meantime, thank you so much, Ross. Have a good time at BMO. I know you got a couple more days there.
Yeah.
And enjoy. It'll be fun. And I hope to catch you soon. Thank you so much for your time, Ross.
Thank you very much. Okay.
And everybody else, thank you so much for tuning in. I hope you enjoyed this episode of the Gold Newsletter. If you did, hit that like and subscribe button. Let us know what you think of the Equinox and Calibre merger down below. We'll be back with lots more. Thank you so much for tuning in. Take care.